It is quite significant. The state banks in China have been earning record profits for 5 years now. Just earlier this week, we had news coming out from the various banks. Their profits have been continuing to improve. However, there's a bit of disconnect between the financial sector and the real economy. Banks' customers, i.e. companies in the industrial sector, manufacturing sector, also the property market, are not doing so well because borrowing cost has been rising. However, the banks themselves are earning record profits.
So this is good news for companies because they will be able to get loans a little bit easier at lower rates, possibly?
Well, possibly. This will take some time to change, though. China's banking sector is quite large and complex. The state banks account for about 50% of the total banking sector assets. And then you've got regional banks and city commercial banks. Foreign banks' share is relatively small, about 1%. So I think going forward, this statement is quite important. We may see the state banks giving some of the profits to their customers, i.e. the industrial companies.
And another announcement that came out today was that Beijing is going to allow more portfolio investments into China. And in fact, they're nearly tripling the quota to about $80 billion. What was the reason behind this?
Well, you know, you're referring to something called the Qualified Institutional Investor Scheme, investing in the Chinese A-share market. It is called QFII. So the previous quota was $30 billion US. After today's announcement, the quota actually has gone up to $80 billion US. What this means is that more foreign institutions will have higher amounts to invest in the A-share market. The domestic A-share market has been relatively depressed last year, and so far this year, the domestic market has underperformed global markets. So at this point, we're seeing more interest from the outside world investing in China. Now that the quota has gone up, I think this is very good news. More foreign institutions will be able to participate in the Chinese A-share market in Shanghai and Shenzhen.
So it'll be good news. And also, what will the effect be on the renminbi? Will it actually decrease the value of it or increase the value of the renminbi?
Well, I don't think the impact will be that significant. As you know, in the last couple of months, we're seeing some depreciation pressure on the RMB because China trade surplus has been shrinking. The portfolio investment into China has been relatively slow. So the pressure on the RMB to appreciate actually has subsided. So at this juncture, the Chinese government is allowing more capital inflows. This will boost confidence in the Chinese domestic market, but it's not going to move the RMB value one way or the other in the shorter term.
And so by allowing more investments, this is Beijing's way of boosting domestic consumption and not relying on the exports.
Well, this is Beijing's way of boosting sentiment in the Chinese domestic market because the domestic capital market is still relatively closed. For foreign institutions to invest in A-shares, you need the QFI quota. Now that the quota has gone up from 30 billion to 80 billion, we think this is very good news for the Chinese capital markets.